Hi viewers, 11th Standard Accountancy, Chapter 13, Illustration Sum number 9. From the following particulars presented by Tilak for the year ended 31st March 2017, prepare profit and loss account. The informations are gross profit, rent paid, gross profit goes to credit side of the profit and loss account. Rent paid is the expenses goes to debit side. Salary is the expenses goes to indirect expenses goes to debit side of the profit and loss account. Commission creditor bracket they have given CR means creditor, which means commission received goes to credit side, discount received goes to credit side, insurance premium goes to debit side, interest received goes to credit side, bad debts is the loss goes to debit side, provision for bad debts goes to debit side, sundry debtors and building is the asset account, it will not appear on the profit and loss account. And the adjustments are given here, some adjustments are given here, that is there are outstanding salaries, rent paid, interest due but not received, prepaid insurance, depreciation on building 10%, further bad debts amount rupees 3000, and make provision for bad debts 5% on some sundry debtors, commission received in advance 2000 rupees. So what they asked, prepare profit and loss account. So we are going to prepare the profit and loss account only. Okay, so we have to before we are going to enter the given information to the profit and loss account, we have to prepare the heading and the format of the profit and loss account. The heading is profit and loss account for the year ended 31st March 2017. What they given in the question we have to enter here, and the format of the profit and loss account is debtor and creditor on both the side. Both have 3 columns, that is particulars rupees. Okay, first entry is gross profit. We always started with gross profit in the profit and loss account. So gross profit 1 lakh rupees goes to credit side. We always started with the word buy on the credit side, and we always started with the word to on the debit side. So on credit side we started with buy, gross profit brought down 1 lakh rupees. Then rent paid 22,000. We have the adjustment for rent paid for 11 months. So rent paid is the outstanding expenses, which means certain benefits we received during the year but the payment is not made for the services that particular during the current accounting period. So we have to add that rent paid 11 months outstanding, considered as the outstanding with the concerned expenses. So 2000 rupees we have to add with 22,000, we will get 24,000. Then salaries rupees 10,000, we have the adjustment for the salaries, that means outstanding salaries amount 4,000 rupees. So we have to add the outstanding. We received the benefit from the salary but not made the payment for the services. Okay, so we have to add this outstanding with the concerned expenses. So add outstanding 4,000 rupees with the salary, we will get 10,000, we will get 14,000 rupees. Then commission received 12,000 rupees. We have the adjustment for the commission received in advance 2,000 rupees. Commission received goes to credit side. So on credit side we have to write commission received 12,000. So received in advance means, so the amount received current accounting period but the benefit yet to be offered to the concerned person the next accounting period. So what we have to do, we have to subtract the received in advance 2,000 rupees from the commission 12,000, we will get 10,000 rupees. Then discount received 2,000 rupees, discount received goes to credit side. So by discount received 2,000 rupees entered. Then insurance premium paid 8,000 rupees, we have the adjustment for the insurance premium, that means prepaid insurance amount 2,000 rupees. What is meant by prepaid insurance? So listen, prepaid in advance, that means any expenses paid in current accounting period but the benefit or services which will be received in the next accounting period. So we have to subtract the prepaid insurance 2,000 rupees from the insurance premium 8,000, we will get 6,000 rupees. Then interest received 6,000 rupees, we have the adjustment for interest received, that is interest due but not received in amount 2,000 rupees. which means accrued income. What is meant by accrued income? Accrued income is the income earned during the year, during the accounting year, but not year received till the end of the accounting period. So we have to add the accrued income with the interest received. That means 2000 plus 6000, we will get 8000 rupees. Then we have the bad debts for the within the sum and provision for bad debts, and also out of the sum we have the further additional bad debts amount to 3000 rupees and additional provision for bad debts 5% on the sundry debtors. Listen, according to the bad debts, we have two bad debts within the sum, one bad debts, and another one is we have outside, that means adjustment, we have the another bad debts. Okay, so we need not worry about the bad debts, but we have to consider about the provision for bad debts. We have also have the provision for bad debts in two places, that is within the sum we have one provision for bad debts, and another one is we have the provision for bad debts on adjustment. Okay, so we have to consider about the provision for bad debts. Let's take the provision for bad debts within the sum. We consider this bad debts with this provision as the old one. Okay, then on adjustment we have the another provision for bad debts. This we have to consider, this provision we have to consider as the new provision. Okay, so how we calculate the new provision bad debts 5% on the sundry debtors? Before that, listen, before we are going to find out the 5% new provision for bad debts from the sundry debtors, let's check that in previous adjustment whether we have any bad debts. Yes, in previous on the adjustment we have additional bad debts. Okay, so before we are going to find out the 5% on new provision for bad debts on sundry debtors, we have to subtract 3000 rupees bad debts from the sundry debtors 40,000 rupees. We will get 38,000 rupees. From the 38,000 rupees, listen here, from the 38,000 rupees we have to find the 5% on provision for bad and doubtful debts. Okay, so after cancel 5% means 5 by 100. Okay, after cancel it we will get 1900 rupees. This 1900 rupees is the new provision for bad and doubtful debts. Okay, so we get new provision for bad debts rupees 1900 rupees. Okay, so we have the small calculation regarding the bad debts related calculation here. So in profit and loss account debtor side, let's take bad debts inside the sum, how much rupees? 2000 rupees. Okay, so we have to enter two bad debts 2000 rupees. Then we have to add the additional bad debts from the adjustment. We have to add the additional bad debts 3000 rupees. So after added we will get 5000 rupees. Then we have to add new provision for bad debts 5%, that means 1900 rupees. So we have to add 1900 from within 5000, we will get 6900 rupees. Finally we have to add the old provision for bad debts, that means old provision for bad debts is the 4000 rupees. So we have to subtract 4000 rupees from 6900, we will get 2900 rupees. Okay, finally. Okay, so after made all the calculation regarding bad debts, we will get 2900 rupees entered on outside of the amount column. Then depreciation on building 10%. Okay, so from the building rupees 80,000, we will get find the depreciation 10% on building means 8,000 rupees we entered. So all the given information we entered in the profit and loss account. Okay, so finally we have the total on credit side, we have the higher value on credit side. Okay, so we get the difference on debit side, that is 65,100. So this is the net profit for the profit and loss account. We have to transfer this net profit 65,100 into the capital account. Okay, So we prepared profit and loss account from the given information. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.